This is a very, very special conversation between myself and S Matthew Schultz, who is the executive chairman and co-founder of Cleanspark Inc., which is, the tagline is America's Bitcoin miner. And I want to make a very, very obvious point here. I have a long position in Cleanspark. None of this is financial advice, but I think that they are becoming, if not already, the best Bitcoin miner from an investor's point of view, from the amount of Bitcoin they're hodling to the amount of debt they have. And I want you to listen to this conversation if you are considering, which miner should I get some exposure to add a little bit of leverage onto my overall portfolio. I want you to listen to this conversation. I want you to meet Matthew. I want you to understand what they're doing, their community-based approach, their low debt-based approach, and I want you to understand exactly how Cleanspark is out-competing some of the biggest boys in the game to start mining more Bitcoin than everyone else in the cleanest, most energy-efficient way possible. Enjoy this conversation. Again, like I'll say, I'm not a podcaster. I'm not an interviewer. So if you have any tips and tricks to make the next one better, then please leave it in the comments. But enjoy this conversation with Matthew from Cleanspark. Firstly, thanks for joining me. Tell everybody your Twitter, because one of the things I don't like doing is having these conversations and you got to wait to the end to find out how to stay in touch with the person. So tell us your Twitter.
It's just at S Matthew Schultz.
Okay, good. So
SCHULTZ. I'm sure you got it on the screen.
Yes, I'll put it on the screen. Everyone, I want you to just pause this video, go follow Matthew immediately, and then come back to it and finish this interview. So now that everyone's followed you, right? Tell us a little bit about yourself, how you got into Bitcoin personally.
Yeah, thank you. So my background is in energy, traditional energy, and then got into renewable energy. And as a function of renewable energy, we built a portfolio of technologies, and then integrated some of that technology into microgrids, which, think the macro power grids, but on a small scale. So we were building power systems for military bases, commercial, industrial customers, and had an opportunity to do some community-based microgrids in South Africa in areas where there was energy poverty. And the challenge was, in order to get the World Bank to even finance these, you had to have a large offtake. You had to have somebody willing to buy that power. And so it posed a unique question to us, and that is, what kind of a consumer of energy is there that can buy the power when it's available, but can curtail immediately when it's not available, that can take that power only when it's necessary and be immediately interruptible? And it's kind of what led us to Bitcoin. So we designed our first microgrid solution for a Bitcoin mining facility back in January of 2018. And then during COVID, we looked at providing a microgrid solution for another Bitcoin mining operation. And what we really learned is that the secret to efficient Bitcoin mining is there are a number of things. Obviously, the efficiency of the equipment and the personnel and the technology stack. But what it comes down to is energy and the ability to have relationships with energy providers. So rather than selling that Bitcoin company a microgrid, we bought the company and decided to use what we know about energy just to do a better job as a Bitcoin miner than was currently available in the market. So that was really kind of our passion play. Started with the idea that Bitcoin mining is a tool to enhance and improve the energy grid was our kind of segue, but then just developed a passion for the underlying commodity and the use case of Bitcoin and what it means to the planet.
Okay, so and what is exciting you specifically about the direction that Cleanspark is taking? Obviously, I'm a shareholder. I find the company exciting, but what is exciting you about Cleanspark specifically?
I think the fact that we're proving a lot of misinformation as inaccurate. That forever, a lot of the big miners talked about asset light, and you could just plug in a miner at any facility. If you have cheap power, they can host it and make it work. Or, if you have power, you can just plug it in and operate it. And what we learned from the energy business is all about efficiency. It's about peak shaving and load balancing and time of use charges and interoperability with the grid and all that stuff. And so what we've done is, I think you've seen probably on a lot of research reports, we produce more Bitcoin per exahash and more exahash per megawatt than just about anybody in the space. And it really comes down to identifying opportunities where there's abundant power, primarily non-carbon emitting power. And we create these partnerships in these tiny little communities where the city becomes our utility. They buy the power, we pay them a margin. So literally we're partners in the purest sense of the word. They make money when we buy power. And then in a lot of the places that we do business, they charge sales tax on utilities. And so that sales tax stays in these little communities. So they're just awesome experiences. You go into these towns and the budgets for the cities have doubled in a year. The surplus sales tax is actually driving down energy costs for the ratepayers. The what's left over after that is now driving property taxes down in these areas, and we're developing a whole new society of Bitcoin maxis in these rural towns in the southeastern United States. So, it's so cool to spread the enthusiasm and the passion and the meaning of Bitcoin, and to do so and to create a difference in so many people's lives, all while we're making the utility grid more stable and strong.
And I'm kind of curious, what was your first introduction to Bitcoin personally? Like, how did you discover it?
Yeah, so I like everybody read about it online. Magic internet money. I have to try this. So I experimented with it way back in the day and bought a few and traded it and didn't really think any more of it. But then when we designed that first microgrid solution in 2018 and started to understand, at the time, this energy developer was using pods for mining, but they were doing surplus power. So they would buy surplus power or excess capacity, but then they would add a microgrid, so solar plus energy storage, that would enable them to stay connected to the blockchain even when they weren't hashing. So you didn't have that whole reconnection process when the power was back available. So they found an increased efficiency, and then we could also rely more on solar when the sun was peaking. And so for us, it just became this fascinating opportunity that here's a way to really leverage something to make a difference on the energy side. And then I started to understand the use case for Bitcoin, understand what hard money actually means, to appreciate Bitcoin as a store of value, not only, the ability to transact business globally or anywhere else, peer to peer, the security of it. I became a huge advocate. I've, blessed to have 6 children, and, I teach all of my kids about Bitcoin and about how everything that I've taught them since they were young about save 10% of your money in a bank account may not be the right advice. And so it's been an education process for Dad as well.
Oh, that's fantastic. So my viewers are mainly people that are holding Bitcoin as a store of value and as an investment opportunity. If you had to summarize, why is Bitcoin mining important for the world, and why do investors, if they care about the world, if they care about, what the future that we're creating, do they need to pay attention to Bitcoin mining and what's going on in this space?
Well, without Bitcoin mining, the Bitcoin network doesn't exist. It's the miners that validate and verify all of the transactions. So it's not just about creating new virgin coins or minting that Bitcoin. It's about confirming the transactions on the blockchain. So, there was a bunch of euphoria, obviously, leading up to the ETF approval, and a lot of speculative investors felt like Bitcoin miners were a proxy investment to Bitcoin for those individuals that either didn't want to understand or didn't have the ability to own Bitcoin directly for whatever the reason was, and they felt like that the Bitcoin ETFs would replace miners as a proxy. In reality, a Bitcoin spot ETF acquires the underlying Bitcoin daily. After the markets close, they settle that up, but they pay spot price for it. A Bitcoin miner, Cleanspark as an example, pays about 80% less for that Bitcoin. So it serves as a much better proxy to Bitcoin in the instance of miners that actually hodl. So we happen to do that, and you saw last month we mined 650 Bitcoin and we sold 2.8 of them. So we're really focused on building our HODL balance. But I think beyond that, as adoption continues to grow, we're seeing a lot of volatility in the transaction fees side of it. But from a Bitcoin miner, those transaction fees are going to become an increasingly significant portion of the revenue and exposure to that Bitcoin network, which doesn't exist if you're an investor in an ETF that somebody else is holding your coins. So I think, the miners provide a unique service, a unique space, but in the instance of someone that's looking for an investment to gain exposure to Bitcoin, if you find an efficient miner that has a good HODL and a good strategy, I think that's kind of a triple whammy. That gives you everything you're looking for in that investment opportunity.
Yeah, I think you guys have done a remarkable job. I mean, it looks like the valuation of your company, from when I look at it, is about $4 billion right now. Is that correct?
That's correct, yeah.
Yeah. And so what is your current production data? You just mentioned 656, if I remember that correctly, what you said.
Yeah, I think about 650 last month.
Okay.
So it's kind of a difficult thing to measure. So being a nascent industry, you see the metrics that they post online about effective hash rate or, realized hash rate. The problem is that most of the analysts will look at a 30-day period and they look at the number, your hash rate number at the end of the month. So if we're 16 exahash, like what we said we were last month, then they measure your monthly production over that 30 days against the 16 exahash and say, well, you really we're only up 80% of the time. Well, that's a challenge because we went from 10 exahash to 16 exahash in a month. Yeah. So it creates this variability. So, from Cleanspark's perspective, our focus, we've given pretty concise models in our earnings calls and our discussions with shareholders. We've got 32 exahash total of miners that are under contract. The vast majority of that new stuff are all the S21, so super highly efficient machines, much more resistant to higher temperatures, just better quality stuff. And we've averaged out of our fleet. In fact, we accelerated the depreciation on all the machines in our fleet that were over 30 joules a terahash. So really looking to create real value for the shareholders. And so this growth, trying to keep up with difficulty increasing, because obviously the price of Bitcoin, we're seeing a lot of older machines plugged in. So we're seeing global hash rate pushing up to that 600 range. So we've had days this month in the 30 coin per day range. I think our average the last few days is between 25 and 26, but that's at the 16 plus exahash that we talked about where we are currently. One of the things we also discussed is that we're continuing to energize new circuits. We've got these expansions in Mississippi. We put out a tweet earlier this week about the progress of the construction at our newest Dalton, Georgia facility. And then we have 50 megawatts of additional power in Sandersville that everything's built and complete. We're just waiting on the utility. They had a transformer fail. So they sent the transformer back to the manufacturer to retest it. We're talking, 50 megawatts is enough power to energize, a couple of dozen Walmart stores. So we're talking about a lot of electricity. So when it fails an energization test, it's not something you mess with and just say, heck it, let's just hit the gas and see what happens. So that's in process. But there's 50 megawatts of energy and machines racked and ready to go as soon as that transformer passes the test. So we think we'll be at 20 in the very short term. We've given guidance to 32 this year, and then we have optionality to get to 50 with those new S21s that we acquired, or the option for the S21s from Bitmain.
Wow. And I'm shocked at the remarkable growth that you guys have had between the last cycle and this cycle. It's just truly phenomenally impressive, which is why I decided to buy. What do you think differentiates Cleanspark's main strategy to every other public miner here, especially like the favorites of the last cycle, which I think are making some bad decisions? What differentiates your strategy? Like, what exactly are you doing differently from your perspective?
This is a small world, so I want to be very kind to my peers and competitors. But when we started in this space, we didn't get a lot of love. A lot of the other miners in the space talked about the fact that we're just energy guys. You don't understand, whatever the case may be. But we took a very proactive approach, and not to get into the virtue signaling side and talk about ESG, but we felt like having a really solid environmental approach having good social governance, and then being really transparent. Those are all good policies, regardless of what you think about ESG. So we were the first of the majors to publish a corporate responsibility report and a corporate sustainability report. And our focus on developing and sustaining, supporting renewable energy in our energy purchases was a big deal. A lot of the other companies really didn't care about that. I mean, quite frankly, I think Marathon's first facility, they dusted off a coal-fired power plant in Montana and just started shoveling coal to mine Bitcoin. Our concern was that if we didn't appropriately self-govern, that this would be a sizable enough industry that we would attract a lot of negative attention. And then sure enough, Elon Musk sends out a tweet and says you can no longer pay for a Tesla with Bitcoin because of how dirty mining is. Then all of the miners kind of shifted gears. Through that process, we understood that hosting doesn't provide much control. And so we wanted to vertically integrate all of the efficiencies that we could to make sure we take all of the variables out of the loop. So from day one, we wanted to own and operate our own facilities. We knew that the technology stack, the ability to adjust a machine, I mean, a lot of people don't understand this, but you buy a machine, just say for easy math, you buy a S19J Pro. It's a 100 terahash machine, operates at 3,000 watts, so it's 30 watts to process 1 terahash or 30 joules per terahash. Well, if you host a machine, or if you take that to a hosted environment, they take the machine out of the box, put it on a shelf, and plug it in. Well, there are a lot of variables, right? The global hash rate, the price of energy, ambient temperature, all these things are variables. So we built a tech stack that enables us to, let's say there's a time that energy prices are peaking because there's high demand, and maybe Bitcoin price is under pressure and hash rate's really high. So I can take that same S19J Pro, and with technology, I can crank it from a 100 terahash machine down to 75 terahash. But I can increase the efficiency from 30 watts a terahash to about 21 watts a terahash. So I can turn it into a mini XP. Now, I want to be really clear. We don't have many S19J Pros left in our fleet. I was giving you that example for math. But it really is about technology, and it's about surrounding ourselves with the people that know better. Our first partner in the business, we bought our first facility from a guy that was an OG miner, and when we bought him out, I got a certified audit from BDO that he personally mined more than 50,000 Bitcoin over his career. So this is a guy that's forgotten more about Bitcoin than I ever knew at the time. So he becomes a tremendously valuable resource in helping us develop our model, develop our efficiency strategy, our deployment strategy, our relationships with utilities. And then we kind of took it and expanded that to follow the Cleanspark way. So it's just been a unique journey. So I think for us, being conscious of the environment that we work in, going in the front door with all these little towns. I mean, you can't turn on the TV or Bloomberg or CNBC without hearing about some Bitcoin mine that's being protested about noise or about energy or about water. Rather than negotiate sweetheart deals with utilities, we negotiate with the city council, with the mayor, with the utility. We negotiate a fair profit for them on everything that we mine. We make an investment in that infrastructure. We benefit the cost structure in the community. So by doing that, we now have other small communities knocking on our door. So instead of like every other miner in the world right now is trying to chase down capacity, we have cities coming to us because of the way we've done it, because of the discipline that we've shown. And it's not just the story we tell, it's the actual revenue that's generated in the city. So I think all of those steps combined with growing appropriately, when Bitcoin was peaking on the last cycle, we put on our energy hat and looked at where energy prices were forecast to be based on natural gas. The war in Ukraine had not yet started, but the tensions were escalating there. And so we just looked at it and it's like, okay, Bitcoin's $69,000 and global hash rate is 100, but you've got Marathon buying $1 billion worth of XPs. You got Riot buying $1 billion worth of XPs. You've got Stronghold buying $100 million worth of XPs. And so for us, it's like, okay, looking at future pricing models, energy is going to double in the next 12 months. difficulty is likely to double or more based on just the orders that we saw. So what we did is hit the brakes. We sold all of our HODL and we started buying immersion equipment. We started buying transformers and switchgear, data centers, infrastructure. Once the kind of chaos subsided, we're sitting on a stack of cash and a bunch of resources. And then we were able to go back into the markets, and those same S19 XPs that our peers were paying $85 a terahash or $100 a terahash, we were buying for $14 a terahash. So it really came down to timing and efficient use of capital. And then, our operations, I'm on a call every Tuesday morning with our operations team, and every one of the site managers is on there. And it's very common that we're operating at or above 99.9% uptime because of the way we operate our fleets, and because we've integrated repair facilities into our businesses. So there's a repair lab on site in our facilities that we can do repairs all the way down to the chip level. So the microscope with the big screen, and the guys are doing robotic repairs on 3 nanometer, 5 nanometer chipsets on site. So as big of a customer as we are with Bitmain, we do our own warranty work on site. So it allows us, if a machine goes bad, we pull it off. We've got a spare that goes on the shelf. That one goes into the queue in the lab. It's repaired by our guys on site. And I think the final point is every single person that touches a machine at Cleanspark is a shareholder of the company. Wow. So our interests are all aligned. We're pulling in the same direction. We all have the same goal. And that's really just been the secret sauce for us.
I love that. You answered my main question, which was how is your community based? That's what I found really intriguing, was the community based approach that you're taking. Everyone else is feeling a bit opportunistic, whereas it seems like your intention is to bring all of your stakeholders on board, which is what any great company should be doing, right? At the end of the day. And I'm a fan of ESG. I don't know about everybody else. If you tell me there's a $30 trillion to $50 trillion pot of capital, and all we got to do is, do quote unquote the right thing by taking care of the environment, I think that's a good thing. The next question: if you projected out how many Bitcoin per day you guys hope to be mining by the end of the year?
It's kind of like I would have better luck guessing how much change you have in the ashtray of your car, right? I mean, we've got the halving coming, and I think we fully expect that between 15 and 35% of the hash rate's going to go away. It just, the inefficient machines, inefficient operations that can't survive. I think you're going to see a ton of consolidation. I think when you look at all of the North American publicly traded miners, of the top 10, probably 40% of them aren't there in a year. Not that they go out of business, just that there's consolidation for efficiency. So with difficulty being kind of an unknown and hash rate changing as a result of the halving, and then now you've got the introduction of the ETFs coming into the equation. It's a challenge, because we saw days back in December that 12, 13, 14% of our production was tied to transaction fees. So that's another variable that kind of gets left out when you talk about 16 exahash today is going to get us 30 coins. You kind of forget about transaction fees added to it. So I don't know that we've given public guidance, and anything I said would be speculating and probably, not appropriate to kind of give financial advice. But we strongly believe. I'll tell you, a year and a half ago, we had our sights set on being a top 5. A year ago, we wanted to be top 3, and with all due respect to my good friends at Marathon and Core Scientific, we're
there. You're right there.
Yeah,
you're right there. So you spoke about the halving. How is Cleanspark positioned from your perspective in terms of cash flows, debt, and obviously production is great, but how is it positioned to take on this halving and the challenges that these other miners are going to face?
So we've been, with the volatility, we made a decision early on to avoid debt. So I think at our last disclosure, we talked about the fact that we have about $1 billion in assets and about $14 million in total liability, total debt. That's been by design. We've been opportunistic with equity. One of the things that we promised to our shareholders is that we wouldn't dilute for the purpose of dilution, that we would use equity when it would be accretive within 2 fiscal quarters. So over the last couple of quarters, we've used equity to continue to hold every single Bitcoin that we mine. Now, has that paid dividends to our shareholders? I think by keeping Bitcoin that we're in $14,000 each, that are now on our balance sheet at 65,000 or whatever it is today, I think that's by definition accretive. We've been opportunistic in buying machines. So the most, there was a lot of debt available, and it bit a lot of people in the last cycle. We avoided that debt, so there wasn't any bankruptcy, there wasn't any threat of that because we didn't have the pressure of debt. Because of the fact that we have tremendous liquidity. I mean, there were days this month that we were in the top 5 volume traded stocks on the NASDAQ. And so with the flexibility of a shelf offering, we've been able to, there'll be a day that we trade $1 billion in equity, and we could pull 50, 60, $70 million off the shelf offering in a day. Stock's still going up. We can deploy that capital immediately, and it doesn't impact the market. So unlike an overnight offering that a lot of companies have had to do, where you have a bunch of banks on there that, now you've got kind of a hedged position and an overhang, because a lot of those include warrants or whatever the case may be. This is a very clean transaction. It cost me 2.5%, and we take it when we want it, when we need it, and we've been very disciplined with the use of it. And I think the market has seen that. Our use of capital, we talk about efficiency. So efficiency of our fleet, which we have, I think last month we ended up at about 24 joules a terahash. We talked about the fact that that's going to go below 20 by the time our build out's all done. Efficiency of our uptime, averaged 99.8%, I think, over the last month. And then efficiency of our use of capital. So avoiding debt that doesn't make sense, and using equity very wisely. And there's now with the ETFs and with the exposure that we're seeing from Wall Street as more of an accepted, adopted asset class, Bitcoin has now got a lot more appeal. Yep. I get calls now. We haven't accepted it, and this wouldn't be non-public information, but I've received phone calls offering convertible instruments. We can offer you a $500 million convertible debt that is priced at a 30% premium to the market with a 1% coupon rate and a 5-year note. Well, the challenge to that is you enter into a transaction like that, you now got a number of hedge funds on your cap table, and those hedge funds have the certainty that they can convert out of that paper into equity at some point in the future. There's nothing to discourage short selling. So what that does is that it locks your stock into a range, and we really feel like, this is a group effort. The shareholders that have been with us, since Zach and I started this company, we talked about last night, there was a period of time our biggest stress was getting the stock back to $8 because that was the basis that all of our families invested in. And, you take this kind of stuff personally. So being a founder-led company, it's important. We answer every single shareholder email. It's sometimes people love us, sometimes people hate us. Sometimes you're the windshield and some days you're the bug. But I can tell you that as I turn around and look in hindsight, there are not a lot of things that I'd have done differently. I'm very proud of the group that we have. I mean, Zach is an incredible young man. Turned 38 years old yesterday, from a little town in Utah, and he's at the captain of the ship of a $4 billion company. So, I'm really blessed for the team that we have and the communities that we work in. And, last point, you mentioned the community involvement. We all have golf shirts that, say Cleanspark on the sleeve. And I was telling the story that, you go into these small towns, you're wearing a Cleanspark shirt, there are only 3 restaurants or 4 restaurants. They won't let us pay. And Alex from CoinShares, I met him at the AIM conference in London last year. And in fact, I'll see him again when I'm there in a couple of weeks. Alex came over to tour our sites, and we sat down at lunch, and a woman came over and started chatting with us, and she said, I was late for your investor day at your new facility because I had a car accident, but my husband would never forgive me if I didn't make it because he's the mayor, and we just love you guys so much. Alex looked at me after she left. He's like, please tell me you planted that.
Yeah, no, I think having the whole community on board is absolutely fantastic. So in terms of your future growth strategy here, are you going to continue operating these sort of smaller, numerous, like spread around the country, smaller facilities, or are you going to think about opening up, mega facilities?
So I think So our Sandersville site, we energized 100 megawatts. There's an additional 50 megawatts, and it was 86 when we started. So we're after our last expansion. So 236 megawatts, I think that is, will probably be the largest mega site that we do. I think we're probably more likely to, you'll see 30, 50, 100 megawatt sites, maybe 200 in areas that it can be beneficial in the community, that it's got a good energy mix that also gives a good return to our shareholders. So we like these rural communities that have access to nuclear, hydro, power that would otherwise go to ground or be, exported to somewhere else. So, we're in Mississippi, we're in Georgia, they're net export states. The contracts that we've entered into benefit the state, benefit the community. So we're going to continue focusing on that. We have an M&A call every week. Our whole team is on there. There's 24 projects. I mean, we had stuff in Western Europe. We've had stuff in the Middle East. We have stuff in Africa that we've analyzed, and it's pretty intense, right? I mean, you look at counterparty risk, and you look at the local jurisdictions, and you look at the stability of the government. You look at import tariffs. You look at consistency of power, and there's a lot of excitement. Marathon's in the UAE, and Bitfarms has stuff in Central America. But I think when you look at it holistically, by the time you cover import duties and tariffs and taxes and curtailment during the day, and then you have the counterparty risk with your partner. I mean, we had an opportunity with 02, the guys in the UAE, to go into business, and our consideration, our M&A talk was, what happens? Terrific people, terrific, abundant nuclear power, wonderful opportunities. But let's just say hypothetically, there's a business disagreement. Right. Where do you litigate that if you're in business with the sovereign fund? I mean, do you sue the sovereign wealth fund in the country in which the sovereign wealth fund controls the country? I mean,
Can you even sue? You can't even sue.
Exactly. And so I think it puts far too much risk on our shareholders, at least at this juncture, to step into the unknown. Yeah. There's a lot of noise about policy in the U.S., but I think the guys that are advocating for Bitcoin mining at a policy level, Lee at the Texas Blockchain Council, I think he and his group worked. Riot was on the face of that last deal to get rid of the EIA subpoenas, basically, to all the miners. Dennis Porter at Satoshi Action Fund. All these guys that they're really forward thinking, and they're advocating at a federal level for policy. That I think they're educating the policymakers, and it's making a safer environment for Bitcoin miners to be here once the policymakers understand the positive impact we have on the stability of the grid and on the communities that we would do business.
Yeah, and you were, I believe, the first miner to adopt the new FASB rules, right? Is that correct? What impact do you think that is going to have in this cycle compared to the last cycle, as far as demonstrating exactly how good of a business this is?
Well, I think it's substantial. I mean, if you look at this quarter, the quarter ending in March, we have variability from, Bitcoin was $40,000 at the beginning of the quarter. It's been as high as 73 or 4. It had a flash crash down to 66. The old rules would require you to take the lowest trade during that entire period. So if for one day on the 1st of March it was $43,000, you have to write down the value of your Bitcoin to that level for the entire period, and you can never write it back up. Yeah. So if we're talking about fair value, how is that providing transparency for any investor? They can't make an informed decision because you don't have all of the facts. So now the ability to fair value the assets that we hold, especially since we're targeting 5,000 Bitcoin in our HODL before halving. So that's a big goal. We did say we're at 4,200 as of the end of February. I think you're gonna continue to see some upgrades, but we're holding a tremendous amount of Bitcoin. So if you're forced to impair that down to an unrealistic number, it skews the financials, and it's not an accurate picture of the operation of the business. So I think it's going to be beneficial. I think everybody has adopted that in their filings. It's made a big difference. I think Iris Energy reported yesterday, and they had a nice gain based on that. I know it helped close the gap for Marathon on some of their stuff. So I think it's important. I think it really gives a much more accurate picture of what our daily operations look like, and it gives the investors the full sheet of music to kind of make their decision from.
I agree. And how do you feel, what do you think the impact is going to be with, obviously, the ETF launch, right? We've opened up to a $100 trillion market, basically, this asset. Bitcoin's now IPO'd into American capital markets. How do you think that's going to impact capital flow into Bitcoin mining stocks over the next, year to 5 years?
Kind of back to the comments I made in the beginning, I think there were a lot of pessimists online that felt like Bitcoin mining stocks were a proxy to Bitcoin, where ETFs are now that replacement. And I think the educational process, especially like Gautam at Bernstein, just updated his reports and his model. He updated his forecast on Bitcoin to 90,000 this year. But he's I think between Gautam and like Josh at Cantor, they're much more Bitcoin maxis. They understand Bitcoin, so they give a much more realistic trajectory to where Greg and the guys at Chardon. I just did an interview with them yesterday. They're the same way. They look at all of the variables, and I think they give a lot of credit to Bitcoin miners as a result of the ETFs, because trading an ETF back and forth doesn't result in transaction fees for a miner. But when the ETFs procure the Bitcoin, that results in a transaction fee to the miner. And where Bitcoin ETFs reached that $10 billion threshold just shy of 30 years faster than gold did. I think we're now seeing it as a real asset class that's being held in portfolios that matter. Brian Dobson was the other guy at Chardon. I can't remember. I can't believe I forgot his name. Anyway, I think the adoption that the ETFs have introduced is going to increase the demand for the underlying commodity as a significant component of a properly distributed investment portfolio.
Yeah, I agree.
I think miners that HODL and miners that are vertically integrated will be the winners by a runaway margin in this space, because it's giving exposure to Bitcoin at a price that literally nobody else can see.
So you guys, to a certain extent, tell me if I'm wrong, but you guys seem like the insiders, right? You would know everything that's going on from the root level of the entire Bitcoin economy, because you can see the actual flow coming through the network. Now, everyone can see that, but you guys are professionals at seeing that. So what do you think, and based on what you've seen, and I don't know how much you can talk about this, but what do you think is going to be the price for Bitcoin in this cycle? What sort of range do you think that's going to play out? Obviously, purely speculating here.
So Gautam from Bernstein raised his target to 90,000 this year, and I think that's extremely conservative. We have a bull, a mid, and a bear case for where we see Bitcoin. So if I take off my Cleanspark hat and just Matt, personal, not financial advice, I think it's very highly likely that during this cycle it exceeds 250. I think 100 this year is probably almost a foregone conclusion. In fact, I'd be shocked if we didn't exceed the previous all-time high by $10,000 or $15,000 by the time the halving gets here. That's just my personal opinion, but we've developed terrific relationships in the space, and I could probably talk about this since they sold out. But Valkyrie had multiple different Bitcoin ETFs. Now they just sold the coin shares. And Leah Wald, who is the CEO and founder of Valkyrie, has become a great friend of CleanSpark and me personally. And we had a conversation, it's been a couple of weeks ago, but she was sharing with me that there's so much activity, so much demand for the ETFs. And then once that day is over and it's settled, there's now a bidding war for the Bitcoin to fill all of the orders for which they've sold exposure.
Yep.
And so we had a conversation and the word supply shock was mentioned. So we've all seen access to the GBTC liquidations, and we know that that's where the vast majority of the supply has come from. But what's been shocking to me, and I think everyone else, is with all of that increase in liquidity, the prices still continue to appreciate as a result of that demand. It's
phenomenal.
The Bitcoin mining, there are 900 Bitcoin produced every day. Doesn't matter how many miners are on the network, and even at 600 exahash global hash rate, it just makes the pie smaller. But it's still 900 Bitcoin a day. Yeah. So 40 days from now, that becomes 450. So when you cut global supply in half, and the biggest seller in the space is no longer liquidating, and demand is at an all-time high by an order of magnitude, I mean, it's almost scary for me to be on a call like this because I don't want to come across like I'm giving financial advice or suggesting it, but how crazy would you be to sell at a time like this?
Exactly. You're basically halving supply and 10xing demand.
Precisely. And, I wasn't the best student, but I do remember Econ 101. You know what I mean?
Yeah, no, it's true. So my last question, I want it. It's a slightly ungentlemanly question, but that's what the people that are watching, that potential investors, will be wondering exactly this. And so I'll ask it in a sort of half ungentlemanly way then. So what are the top 3 things that are exciting you most about what CleanSpark is doing? And subsequently, based on those 3 things, why an investor would choose CleanSpark over Mara and Riot?
Oh, wow. First, Jason is a friend of mine and Fred is a friend of mine. I like those guys. We spend a lot of time together at different conferences all around the world. And I like them. They all have different approaches. Marathon is the biggest in the world, and they got there because they grew fastest. They raised the most cash. And their approach was asset light. Buy machines, plug them in, increase hash rate, grow as fast as you can. That's now changed. We saw last week they bought another couple of facilities, spent a significant amount of cash to buy their own facilities. I think that's the right move. I think it's challenging because to get where we are at 99% uptime isn't something that you can walk in and just do. It doesn't exist. As evidenced by Riot. So Riot has tens of thousands more machines than CleanSpark and hundreds of thousands more megawatts of power, and yet we outproduce Riot every month as a result of efficiency. Now Riot's used curtailment and energy revenue to kind of offset that for their shareholders, but I think that the institutional investor base, if you look at the distribution of institutional investors, I think CleanSpark is at the top of that list. And I think what they're looking for is efficiency of the fleet, Bitcoin per exahash produced, exahash per megawatt online, and then overall fleet efficiency. And you couple that with operational efficiency and growth trajectory, as well as unit economics. So you look at the price that we're paying for the next 160,000 machines, we'll have the most efficient fleet on the planet. We have the best operators on the planet. We've grown by buying companies and acquiring talent that is far smarter than anybody on our team at the time. And it's that knowledge base. It's the guy that mined 50,000 Bitcoin. It's guys like Taylor Monig that oversee our mining operations. The guy was building dual phase immersion cooling equipment in his dorm room at Arizona State a decade ago. And He geeks out on mining stuff. He sends me texts, and, hey, we tested a new firmware, and we reduced the power and increased the output over 30 days. We got $50,000 in free hash rate on this 3,000 unit piece of miners, and so he blows that out over the course of a year. So our tech stack, the hardware, the firmware, the operational stuff, it's kind of a dial, right? There's a model that runs in real time. I think what differentiates us is the fact that we don't do something just for the sake of doing it. We've never grown just to grow. We identify equipment, opportunities, and personnel that are very specifically targeted to provide an end outcome or to fill in a gap that we don't have. And it hasn't been a matter of a reaction. It's been proactive. It's been planned ahead. We started planning for next month 4 years ago. The fleet of machines that we've acquired and the negotiations on infrastructure that we're currently undergoing are in preparation for 2028. So I think, we've not been caught on our back foot because we've been proactive. So I think if you're looking to maximize the value of your investment, it's certainly worthwhile to take a look at what Cleanspark has, what we've done, what we've promised, and what we've delivered, and what we forecast in the future.
Oh, that's wonderful. Listen, look, I really appreciate it. There was one video I watched of yours, and you were. What I love is like how much effort you're taking in educating the market also about Cleanspark. I remember you saying in one of the videos that you realized that Cleanspark wasn't even on some of the Bloombergs that you were looking at, and you had to educate them on putting it on there just to even have it as a part of the consciousness. So, I appreciate it. Thank you so much for your time. Hopefully we can do this again at some point at a higher price for Bitcoin and more production for Cleanspark. I'm happy to be a shareholder myself. And I'm looking forward to writing this with you.
Cheers to that. I appreciate the time. It's terrific to meet you, and man, I'd be honored to come back again. You just say when.
Thank you so much. All right, I hope you enjoyed that conversation. And again, like I will say, none of this is financial advice. I do have a long position in Cleanspark, and a lot of the reasons were covered in this little conversation that we had here. I want to express my gratitude to Matthew for doing this. I think Cleanspark is a remarkable company, and everything they're doing is just to the benefit of not only the shareholder, but to all of the stakeholders that are supposed to be having a stake in the business. And I hope you got that from his passion and his interest and his desire to help the world around him, the community around wherever they're having their mining operations. And I think it's a wonderful company, and that's why I decided to put my dollars where my mouth is and take a large position in Cleanspark, and I look forward to writing it with the Cleanspark team. And the team is so great. They're so efficient. We can say that mining is efficient. The team is efficient. It literally took 48 hours to organize this, and I truly appreciate Matthew for doing that. So please follow Matthew on Twitter. I'll put his Twitter in the description of the video. And again, no matter what you're going to do with your Bitcoin portfolio, there are always, ultimately, only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.